Hello, Business 330. This is Professor Hassey. It's towards the end of our week 5 here in business finance. Today's date is Saturday, September 25th. And this is a review session for our Road King Trucks case, which is due Tuesday, October 12th, with extensions if needed by the 9 teams that we have selected for our course. Again, this is a mandatory case paper that's determined by the College of Business and Public Management as a class or a course assessment paper. It's required by the business to get a business administration degree that you have to complete this case. And it's necessary for any of you who are going on in the study of finance or business or even a graduate degree. This is an important process, the capital budgeting process and interpretation. So that's why we're doing it. And I've broken you all up into 9 teams. Some teams have 2 members, some teams have 3 members, some teams even have 4 members. But the one team that does have 4 members in our group, the one student in that group is incognito the last couple of weeks, so I don't even know if he's around. But here we go, and this is a review session to give you some key points of the paper. This is what I'm going to go over. First thing to go over is when I broke up the teams, I've asked you to each team member to do a particular part of this of this case, and the grading of this case is basically 50% of your grade will be on your individual work of those questions that I asked that you are responsible for as on your team, and 50% will be your overall team performance of the 3 of you or 2 of you on the team. So it's split. So your actual individual work as a part of the team effort and the overall team effort of putting together the paper and the analysis. I'll be looking for 2 files to be posted by Tuesday, October 12th. The first file is a spreadsheet file with a capital budget analysis of comparing the 2 products, the LA engine and the California engine. Let me just show you where those are. If you go to Exhibit 1, excuse me, not the LA engine, the Detroit engine and the Marcus engine, excuse me. And you're basically doing 2 spreadsheets. The analysis of the product Detroit engine with the Detroit engine in the bus, and the analysis of the product with the Marcus engine in the bus. So the engine choices are determining what you're going to be doing for the analysis. So you'll be doing 2 spreadsheets, of which we're practicing now in week 5 and week 6, this spreadsheet analysis. So you're asked to look at pages 2 and 3 of the project, and there's 6 questions there. Each person in your team is to answer the portion of these 6 questions, and then you put them all together into the APA format paper. Now, you as a team can just put it in a 1, 2, 3, 4, 5, 6 mode of answering the questions in your paper, or you can just not even number the questions and just write about the answers and your interpretation of the questions throughout your paper. It's how you set that up is fine, as long as it's APA format, double spaced, you have an abstract, a title page, references, the usual song and dance for an APA paper. So the one set of questions is questions 1 and 3. Question 1 is about the market that the Road King company is making this strategic decision. They're thinking about, due to changes with energy, changes with public transportation, there's a market to produce a bus in the Southern California area. What is the driver behind this reasoning? The energy cost situation. So besides just crunching numbers in this problem, you are also asked to interpret the market, interpret the reason why Road King is determining to do this. Not only getting the return analysis of the 2 various products, but also determining, is this a valid time to do this in the Southern California market? The second question with the first group of questions is question number 3, and that's beginning the analysis by putting together the cost of capital, using the cost of capital to determine, first of all, the capital structure of the company, and then determining the cost after tax cost of debt and the cost of equity using the capital asset pricing model. The next group of questions is question 2 and 4. This is where you're putting together the cash flows. The length of the project is the depreciation length of the project, determining the year zero investment, determining the yearly cash flow, which is net income plus or minus working capital, depreciation, salvage value. Putting all these together, this is mainly the analytical part of the case, is questions 2 and 4, crunching the numbers. And then question 5 and 6 is to evaluate what you have found out by determining the net present value, the internal rate of return, the profitability index, and the payback in years. And we'll be practicing these again in the coming week. You'll be doing an assignment practicing these. And then once you evaluate those capital budgeting techniques and return analysis, what do you recommend to road teams? Should they A, accept or reject the project, and B, which of the two products, if you accept the project, would you recommend them to produce? And that's your conclusion. So that would be in your abstract. So put that all together, and that's how we do this paper with teamwork. So the key to a successful team is communication. If somebody's not paying attention to their texts or emails, you let me know. If somebody's not doing their fair share, let me know. You're going to have an assignment this week, and you're going to have some other duties. But the key thing is to start putting these basic things together and bringing them together over the next few weeks. And I'll be here along the way on Wednesday nights to help you and answer any questions you might have. All right. While we're on the subject of grades, the midterm examination grades will be posted tomorrow, Sunday, September 26th. So you have those grades prior to this week. So look for those tomorrow, September 26th. So let's take a look at a couple of things in this case that's worth following. And that's the exhibits. These exhibits provide us with all the variables that you're going to need to put together into a capital budget analysis. Now, we're just beginning this in our class, and we're going to concentrate a lot on this in the coming week 6, where we're going to look at a practice problem on this. But this will help you as you get going into the work. The inflation rate in this problem is 2.5%. The price per bus, that's the selling price. You're going to be producing 11,000 units a year. 11,000 units a year at a price per unit. Each bus will cost $220,000. The labor cost per unit or per bus is $50,000. The parts for the bus are $95,000. That's per unit. And the selling and administrative expenses, the fixed costs, are $250 million a year. So we're dealing with a lot of numbers here. Also, in addition to the bus cost, you also have the bus with the Detroit engine, which has a per unit cost of $25,000. The other analysis would have the same bus figures along with the Marcus engine bus, which is $18,000 per unit. So your variable costs are $50,000, $95,000, and for the Detroit engine, $25,000 per unit, and with the Marcus engine, $50,000, $95,000, and $18,000 per unit. Those are the differences. At the same time, you have one other additional cost line, and that's the warranty on the bus. What that means remember, this is let's make sure you know where this is. The depreciable life of this bus is 20 years. So for every year, 1 through 20, you're going to be producing a bus, 11,000 of them each year, at a sales price of $220,000 per bus. And for 20 years, you're going to depreciate this straight line over the investment, and we'll get to the investment in a minute. And you're going to be determining a warranty. So every bus produced year 1 through 20 is going to have a 5-year warranty on each one of those buses. So this is going to be another variable cost. The thing is here, where I give you the variable cost for labor and parts and for the engines, you have to calculate the variable cost per unit. And that's by taking the 5 years of $1,000 per year for the bus warranty and $500 per year for the Detroit warranty and $2,000 per year for the Marcus engine warranty, and determine the per unit basis by discounting and determining the present value of 5 years of those costs into one number. And the reason why we don't use the present value is because you're producing buses every year that have a 5-year warranty. So you got to have all those 5 years of cost into one number and apply that variable cost to every year that the bus is being produced, year 1 through 20. So for example, so the warranty for the Detroit engine analysis would be $1,500 per unit for 5 years. So you have to find a way of discounting those 5 years of $1,500 a year back into one number. The big mystery is, what are you going to use as a discount rate? Are you going to use inflation in your analysis? That's something you need to think about. The Marcus engine, the warranty would be $3,000 per unit per year for 5 years. So you have to discount those $3,000 over 5 years back to one number to determine your warranty cost. So you're going to have a new line on your analysis. You're going to have a line for variable costs, fixed costs, and then a warranty cost line. So you're going to have to create a third cost line on your analysis. And we'll talk more about that in week 6. In addition to that, what's your investment? What is the year 0 investment? If you remember our discussion of last week, year 0 is when you pay for the asset and now determine the cash flow going to be generated in the future of that asset. In this case, the year 0 investment is $1 billion. Whoa, $1 billion. And you're going to depreciate that $1 billion over 20 years. All right. You're going to depreciate that over 20 years. And if you notice in this project, the salvage value in year 20 on this project is $10 million salvage in year 20. Now, these other costs here, it talks about in Exhibit 2, $100 million in year 1 and year 2. Those are for, if it notice here, these are non-depreciable labor training costs, and they're treated as business expenses. So you have 2 additional expenses in year 1 and year 2 called training costs for $100 million. After year 2, they're not there anymore. They're another word for them, but for some of you might be aware of, it's like a startup cost. You have to train your people and get everybody up to speed on the product. So you're allocating $100 million of cost in year 1 and year 2. So that's an additional line you need to include in your analysis, the training costs in year 1 and year 2. In addition, we have working capital as 10% of sales. We've begun to look at that in class, and we'll look more about that as an example in week 6, leading to a salvage value of $10 million. In addition to that, we have to determine the weighted average cost of capital. And then we're told in this problem that the debt ratio is 50%. So our capital structure is 50% debt. What percent equity would that be? Our tax rate is 30%. Inflation doesn't have anything to do with the weighted average cost of capital, but the inflation rate is 2.5%. We'll need to do that for our variable costs and fixed costs in our analysis. And then what is the cost of debt? Well, this company is in the high end of the A range of bond ratings, so that makes it 6.25% to 7.5% their cost. But then I give you a specific number here. The company's current bonds in the market have a yield to maturity of 6.5%. That should answer your question about the current cost of debt in the market. On the capital asset pricing model, you have a 10-year risk-free rate of 1.35%, a market premium of 8%, and a company's beta of 1.25. And now you can calculate the cost of equity. So the first thing you should do is calculate the WACC, because you're going to need that number before you start doing anything else. So that's one of the first things, and that is one of the questions. Question 3 that one of your teammates need to do is the cost of capital. So that's the case. That's the numbers. Now, I have also provided a checklist. And this checklist will be posted to Blackboard with all the various things you need to tick off. And I've already filled some of these things in. This checklist is all the things that you and your teammates need to make sure you have and ready to put into an analysis. Make sure you know where they are. And it's in this order. You have to calculate the WACC first. That's Exhibit 3. You have to understand what the investment is in year 0. What is the project life? How do you calculate depreciation? What's the salvage value? Is there that additional expense of training? What's our analysis begin with? What's our revenue? What's our variable cost? We've been through these. Fixed cost. Now you do your warranty cost calculation. Your working capital. You know the inflation is 2.5. Where does that fit in all this? Once you determine your net project cash flows, what's our return analysis? NPV, IRR, profitability index, and payback in years. Then you write about, once you have all these analysis done in 2 spreadsheets on the same file, 2 different tabs. One spreadsheet would be called Detroit. Another spreadsheet would be called Marcus. Basically, you do Detroit first, then you copy it and fill in the changes with the Marcus engine. Then you answer your 6 questions at a team, and then you collaborate all those 6 questions into an APA format that makes sure you explain to me what your conclusions were in this analysis. So these are the things you should start working on probably beginning next week or the end of next week as we go forward into week 6 of start locating these variables and beginning to set this up in a capital budget analysis. Very similar to what we started working in week 5, but more specifically, I'll give you a template in week 6, which will help you. Follow this template, follow this checklist, answer your questions, and you should be in great shape to finish up this paper as a team. And that's very important, to work as a team to make it sure you cover all the questions and answers. In addition to that, I hope you've had time to read some of the additional material that I've provided you. Just talking about the format of the case in the written, 12 pitch times Roman font. You don't need to use single space. I prefer double space, really. This is the College of Business preference, but I don't like reading single space work. So double space is I would prefer. There's a sample, there'll be a sample paper posted so you can get an idea of what the format looks like. Everything is corrected as far as spelling and all that sort of thing. It's due Tuesday, October 12th, but you do have some extra days if you need it. Here's another another file that was provided you, of which another way of ticking off the key areas, but this is what the checklist that I just gave you or showed you is very similar to this format. Here's the rubric, which tells you how I'll be grading the work by your team, what areas I'll be looking for. You might want to look this over and how I'll be grading your work. This is very important for teams to understand that. So please read this, and if you have any questions, bring them to class on Wednesday, bring them to our review sessions on Thursday, or send me an email, post to the discussion forums, and I'll be happy to answer them all. Okay, here I am in the Blackboard file folder for the Road King Trucks case, and here's an updated, and I sent you an update the other day of our teams. There, a couple of team members wanted to be with particular students, and I obliged them and put them in the new groups and move things around a little bit. So if any of you have any questions or concerns, you can contact me about these, about your team members. Make sure you have contacted everybody and everybody is aware of what's going on with your team. If you're not getting a hold of people or people aren't responding, you let me know. It's not tattletaling. It's not anything. It means they're not. It means that's my job to make sure all you guys are working together, and you don't have any, for lack of a better word, slackers. Everybody's doing their job and doing it together and communicating. I understand some of us will have a difficult time doing this, but that's why we have the class on Wednesdays. That's why we have student hours on Thursdays, and we have this review. Please pay attention to it, and it'll get you through this assignment. So if you have any questions or concerns about your team, the updated list is now posted in Blackboard in the case paper file folder, and you can check it and make sure you get a hold of those people on your team. Okay. Secondly, also, if going back to week number 5, and here is make sure that you're all aware of our responsibilities over the next few weeks. These important dates, make sure you are aware of them. This coming week, we have an assignment 3, which will be a practice for this Road King case where you'll actually do a capital budget analysis. So these are all the key dates coming up in the next few weeks, so everybody's aware of it. I will post your midterm grades from last week tomorrow on Sunday, so you get an idea at the midterm point where you stand. And if you have any concerns or questions about that, please feel free in the next week to get in touch with me and we can discuss it. So in summary, the Road King case is a example of calculating a capital budget, return on investment analysis of a strategic business plan or model that's considering a change in the product to the market that this company serves. Your job as a student is to determine the return analysis of these two different products, and then answer the questions as giving a conclusion and a recommendation to Road King about should they accept the project and what project or what product would you recommend based on your analysis. You're going to be doing a market appraisal of the situation for Road King. That's why I give you the company profile and various other information in this case. So you put that together, you coordinate with your teammates, and you give me 2 files posted on by October 12th. Again, I'm around all the time for help, for information. I know some teams are beginning to work on this already, but after week 6 and practicing this work in assignment number 3, you'll be really ready to go and crunch this into the future after this next week of study. So pay attention with our analysis next week. And that's where we go to next. I will have a introduction video for our week 6 on Monday of this week, September 26th, a day earlier, hopefully. And then I'll see you all on Wednesday night. And please review this material on the Road Kings and come with questions if you don't understand. All right, everybody, I appreciate taking the time this weekend to look at this. I'll see you all in the coming week and have a great rest of your weekend. Take care.